Welcome to your Mortgage Insider Update on December the 16th, a Tuesday update for you, as today was the jobs report, delayed jobs report from both October and November, released after the shutdown. So this information is a little bit older. It includes during the time period in October where the government cut a lot of jobs due to the shutdown itself. A lot of jobs from the Doge cuts that were a lot of government workers were offered an early buyout back in March when the Trump administration first came in. That took effect in October. So as expected, jobs numbers in October was actually quite weak, a loss of just over 100,000 jobs in the main report. And then for the month of November, we had a gain of 65,000 jobs. Interesting, as you dig into some of the details, most of the jobs with this time of year are actually part-time jobs, which makes sense during the holidays. There'd be a lot of part-time hiring. Long-term, like full-time jobs actually dropped pretty significantly. Under 1 million jobs actually lost in that sector of the economy. That includes government workers, that includes any other type of company that had layoffs or reductions. So the part-time worker increases was over 1 million, which made the positive jobs report for the month of November at 64,000. Unemployment rate going up pretty significantly, 4.6%, 0.2 higher since the last report, which would have been back in September. If we look back to June of this year, jobs in general jobless rates have gone from 4.1% to now 4.6%, so a 0.5% increase. Some might think that the Federal Reserve had a little bit of a insight into these numbers coming out this week when they made their decision to cut the interest rate last week by 0.25%. The projection is for there to be fewer cuts next year. No one's really ready to commit to anything, but continued weakness in the job market could create some opportunity for additional cuts into the 2026 year. The next meeting for the Federal Reserve is not till the end of January, so they're still going to have the December jobs report will come out here at the beginning of the year, and some more inflation reports are starting to catch up, which will start later this week. So positive look at the interest rates overall. Let's take a look quickly at what's happening in the world of interest rates following the 10-year Treasury. A quick look at the unemployment rate numbers, just taking us back to beginning of February, 4.1% with a tick up. Unemployment rates generally have been pretty flat throughout the year, ticked down actually in June to 4.1%, and then has steadily climbed up, missing the October report. So this unemployment rate was not announced through the October missing month report. So presumably you would guess that unemployment rate went up a little bit in October to say 4.5 in order to jump to 4.6% for this most recent report in November. A quick look at interest rates on the 10-year Treasury. 10-year Treasury yields track very similar to what the direction in mortgage rates do. So it's a really simple tool for you to look, just generally speaking, at Yahoo Finance or anywhere online to see kind of the direction of things. And we do see some relief in the 10-year Treasury after it has gone up. So since the end of November, anticipation around this jobs report coming up, we saw a dip in interest rates, a rise in interest rates, and now hovering just slightly above. If we look back to middle of November, the average here. We're hoping to get a little bit further bounce lower so far, with the jobs report being pretty negative jobs report. Still not seeing a huge drop off in interest rates to take us down to lower levels that we had seen, say, back in middle to early November. Overall, though, with unemployment being the first set of data points, the inflation report will come out this Thursday for a consumer price index in November. That showed we did get an October inflation report that was put in for the Social Security Administration's calculations. They had to keep that part of the reporting even through the government shutdown for October. So November will not be a catch-up. It will not be 2 months of inflation data, but it did show weakness or improvement, I guess, lower inflation back in October. We're expecting a little bit of improvement in November. So the likelihood of interest rates waffling, they seem to be going down, then they go up. The next likely move would be down with improved data points, such as a better inflation report on Thursday. And coming up in just a few weeks, first week in January, we'll get the December jobs information. if jobs are continually weak, if unemployment rate were to go up even higher than 4.6% at the beginning of January, that could be where we see lows in interest rates bring level down to where they've been vacillating over the last couple months. So thank you so much for joining our Mortgage Insider Update, and happy holidays to you, and safe and happy New Year's.